Hi everyone. In this video, I'm going to go over what fixed and variable costs are. It's important for managers to understand the fixed and variable cost in an organization so that they can make better decisions on the costs. Okay, fixed costs first. Fixed costs are the costs that remain the same in total regardless of changes in the activity level. So if you're paying $50,000 for rent per month, that $50,000 is fixed every month. You're going to pay fixed $50,000. However, the fixed cost per unit will vary. So it's going to vary inversely with activity. As volume increases, unit costs decline and vice versa. So if volume decreases, the unit costs are going to increase. On the next slide, I'm going to give you an example of that. Okay, so Clay Company produces specialty soaps, and they rent a building to produce those specialty soaps at $10,000 per month. Total fixed costs remain constant at the $10,000. It doesn't matter how many units they produce. In total, those fixed costs are $10,000. However, on a per unit base, the cost of rent will decline as production activity increases. So here's an example. If Clay Company produces 2,000 units, you're going to take the $10,000, the total cost, divided by the 2,000 units, and that, in this case, it will cost Clay Company $5 per unit in fixed costs. However, now when you increase activity, so now they produce 8,000 units in a particular month, the unit costs will now be $1.25. You're going to take the 10,000, the total fixed cost, divided by the 8,000 units, and that will give you $1.25. So the way I remember fixed costs is fixed costs are fixed in total, but they will vary per unit. Next slide are just examples of fixed costs: property taxes, insurance, depreciation, amortization, interest expense, salaries can be fixed, rent, utilities, loan payments, so just different examples. Okay, next slide, we're going to go over variable costs. Variable costs are going to vary in total directly and proportionately with changes in the activity level. If the activity level increases, so will variable costs in total. If the activity level decreases, variable costs will also decrease. Variable costs, however, per unit are completely different. So variable costs will not change per unit. Variable costs will remain the same at every activity level. So this helps me remember variable costs. Variable costs will vary in total. However, they are fixed per unit, which means they will not change per unit. Next slide, I'm going to have an example. Okay, so here's the slide. If specialty soaps cost Clay Company $2 per unit to produce, well, guess what? That's all the cost of those specialty soaps. All the direct materials, direct labor, overhead, it's $2. Can't change that. So, but depending upon how many units they produce, then it will change. So if Clay Company produces 2,000 units in a particular month, the variable costs in total will be $4,000. You're going to take the $2,000 units produced times the cost per unit, $2, and that gives you $4,000. When Clay Company produces 8,000 units, the variable costs in total will be $16,000. So the more you produce, the more expensive your variable costs will be. The less you produce, the less amount in total of your variable costs. One more time, variable cost per unit will not change. Next slide is going to be examples of variable costs. Sales commissions depends upon how much they sell. Direct labor costs, it depends upon how much they produce. They're working on that particular product, maybe a mountain bike, if they're the direct labor, if they're not producing as many mountain bikes in a particular period, then the direct labor costs will be lower. Cost of raw materials, again, if they're not producing a lot in that period, then they're not using a lot of materials. Production stock, lubricants, cleaning supplies. If the machines are not being used that much, they're probably not going to be using that much oil. Shipping fees when selling a product. Now this is related to freight out. All right, so remember we went over freight out and freight in. So freight out, they're not, when they're selling the product, they're not going to have to pay shipping costs because they're not selling the product. Utility costs. Now that's, utility costs can be both fixed and variable. So in the example of a lighting bill, you have to pay a fixed charge no matter how much you use your lights. But that same utility bill, if you're working in the factory a lot and you're using a lot more electricity, then that will be a variable cost. So it depends upon how much you use. Well, guess what? The next slide is example, a lot of times, of utility costs. Utility costs can be a mixed cost. So you're going to have one component, the standard charge to use that electricity, no matter how much you use, you charged a set fee, and then the variable will be depending upon how much electricity you use in that particular month. And that's a mixed cost. So a mixed cost is both fixed and variable. Okay? All right. So those are the different costs: fixed, variable, and mixed costs. See you again soon.